Hey guys, it's Nick Goucher, Legacy Home Loans, and by now you've heard rates drop to zero. What does that mean for you? Let's talk about it. The other night, Federal Reserve, they did the unthinkable, and they dropped the rates, the federal fund rate, down to 0%. What is the federal fund rate? This is also known as the overnight reserve rate. So by law, all large banks, they have to keep, let's say, 10% of all their deposits in the bank at all time. So they lend on 90, they keep 10. So they're giving out car loans, business loans, mortgage loans, credit cards, and many times at the end of that night, they might have lent out more than 90%. So what do? They pick up the phone, they call the Federal Reserve and say, hey, I need you to spot me this much money so I can keep my reserve requirement. That's called the federal fund rate or the overnight reserve rate. That's the rate that dropped to 0%. They basically are giving banks 0% interest rates loans so they can keep lending out money in this time of need. Does that impact directly mortgage rates? The answer is no. What we tend to see is impact on short-term rates. So your credit cards, your student loans, your car loans, your business loans, your lines of credits usually get the direct benefit of the short-term rate through the federal fund rate. But let's talk about the second part of what they did. The Federal Reserve, at the same time that they dropped the federal fund rate, they also committed to a $700 billion large-scale asset purchase to buy long-term treasury bonds. Why would they do that? You see, every day there's basically money moving between the stock market and the bond market. People who want high return and people who want a safe return on their money. When there's uncertainty in the marketplace like it is right now, people move their money to look for a safe haven. And so by the by the Federal Reserve committing $700 billion to long-term mortgage bonds, that drives down the 10-year bond, which makes that bond attractive because it's a safer return on their money. And that's why you should see an improvement on mortgage rates, because mortgage rates tend to be measured with the 10-year long-term treasury bond. And so by this direct impact, we should see potentially lower long-term interest rates. We should see expansion into the economy because now there's liquidity in the marketplace. And we also see banks encouraged to lend money because there's so much liquidity going into a safety measure. That's the two things that they did. And number two is really the impact that we'll see on long-term mortgage rates. But here's the problem. Right now in America, there are $11 trillion in home loans right now. And of that $11 trillion, nearly $5.5 trillion is eligible or could benefit from these historically low interest rates. Here's our issue. Last year was a phenomenal year in the mortgage business. We did $2 trillion the whole year. The whole year. Now there's $5.5 trillion people of dollars trying to take advantage of these interest rates. There is a capacity issue. Banks don't have the manpower to do that many loans in that short time frame. So let's recap for a second. Federal fund rate, short-term rates being low. I want you to consider looking at your current credit card, student loans, car loans, and seeing can those rates get lowered. If you are in the process right now or thinking about being in the process, I want you to have patience. Expect delays, especially on refinances, because purchase business is still the priority for every single mortgage company because those people have contract dates they have to close. So we're going to see issues with capacity. I'm seeing it right now, but our team is committed. We're working overtime, longer hours to be available to meet that demand. And more important, and lastly, these rates are going to be historically low. So if you are a homeowner, you're not in the process right now, you want to see how this benefits you, click the link below. Let's have a conversation on how rates can help you either lower your payments or take some cash out to do home improvements, do investments, while still keeping the payment low. And if you are a if you're a future homeowner, there has never been a better time to buy a home. So contact your brother below. Hope that it's helpful. Rates are not zero, but they're still super duper low. See, the phone's ringing right now. Let's go.